Hi there, I'm Scott Daly with Daily Real Estate. This is our 2026 market analysis for the year. First of all, Happy New Year, Happy Holidays. All that's behind us now, and we're looking forward to 2026. The general consensus with 2026 is that the economy is going to do pretty well. Real estate has had a weird couple of years. You know, interest rates were so low and inventory coming right out of COVID in 2020 and 2021. Things have kind of leveled off. Inventory numbers are way up from there, but they're still not at pre-pandemic levels, but they're close. Interest rates have obviously changed dramatically and are now positioned probably in the low sixes, from 6 to 6.5, generally speaking. And so that has had a huge impact on rates and on the pace of sales, because a lot of people are in a house at a very low rate and would have a hard time making the move. So the question is what's going to happen this year? And this is a couple of points to unpack. And the first one, and probably the most important one, is don't wait for the rate. And what I mean is interest rates are kind of in the low sixes right now, 6.2, 6.3 here in early January 2026. They're probably going to fluctuate between 6 and 6.5. And that's just the way it's going to be all year. And that's really not going to change. A lot of folks are looking and they're saying, hey, I'd love rates to go lower, and they're tracking the Fed and the Fed funds rate. And without getting into a lot of details, the interest rates follow generally speaking, they follow the 10-year Treasury. And so they're not that tied to that overnight interest rate or whatever the Fed is setting, because that affects prime rates, but it doesn't affect residential mortgages that much at all. And so that's important to note, is that regardless of what the Fed does, the rates are going to stay in a pretty tight range, I think. And that's the reality is the federal government is issuing a tremendous amount of debt. They're spending a lot more money than they bring in tax revenue. And as long as they're issuing a lot of those debt, it's going to keep the interest rates higher because someone has to want to buy that debt. And so that's going to keep interest rates. So if you're waiting for rates to drop into the 4s and the 5s before you sell or before you buy, you're going to be waiting for a long time. The other thing to remember specifically to the Southern Delaware market is this market is not as interest rate sensitive as a lot of other markets might be, because there's a predominance of retiree and second home buyers. And that type of buyer has the cash and the finances and is not as interest rate dependent. So the market is still going to move. So that's point one. Point two, we specialize in a lot of new construction. So I'll just talk about that. Last year and the previous years before that, the big builders built a lot of spec homes. They just went out, pulled permits, put up house after house after house, and they were able to sell them profitably. That trade really kind of unwound itself in 2025. And the builders had a hard time moving the inventory. They had to do a lot of incentives. And a lot of builders in their quarterly reports and some of their things, they're shifting their strategy towards pre-selling houses, which means they're not going to have specs. So that means the deals on spec homes are going to go away. Listen, we still know where to find them. If you're still interested in something like that, I think you need to move in the first quarter because as that inventory dries up in Sussex County, it is not going to be replaced. There'll still be new home communities, lots of new construction available, but you're not going to be able to walk into a builder with a pre-built house that they just want to dump and be able to negotiate like we've been doing for people before. Listen, just a quick advertisement. If you think our content is good, go ahead and follow us and leave us a like here on YouTube. We'd love to be able to interact with you. We're Daily Real Estate. We're based in Lewis, Delaware. We are an independent, non-affiliated brokerage, and we've been in business for 22 years. So that's us. If you're looking at new construction or anything down here, if you're buying or selling, we'd really love to help. And we specialize in giving you sort of boutique attention between my wife and I. Okay, so we talked about rates, we talked about new construction. The final story really is inventory. Inventory really started to stabilize at the end of the year. It'll be interesting to see. I don't see it spiking. It's still kind of below levels that you would find pre-pandemic, but it's far, far above what you would have seen in 2021 or 2022 when it was a really strong seller's market. The market is really going to be flat pricing-wise, which means I don't think buying in January, you're going to see that pricing very different throughout the year. I don't think there's just a lot of opportunity for price appreciation right now. But if the economy remains strong and the DC market stabilizes, which is one of the main feeder markets for the beaches, which I think it will, I think you'll just see a nice steady rate of sales. So if you're thinking about selling, look, where you set the price point is going to be incredibly important because people are not going to overpay, but they're also not going to be able to kind of take you for a ride on a deal that's not really a strong buyer's market. If you're looking to buy, again, same thing. Market's going to set the prices. There are some pockets of weakness in the market here that we know how to look for. So you're thinking about value, but if you're thinking right now the market's slow, we're going to come down here and we're going to be able to steal something. Probably not. That's just not where the market is right now. And again, if you're looking at new construction, it makes sense to reach out to us before you go to the builders, because as the market continues to change, we're going to be able to have the inside information. We're going to be able to save you some money and help guide you through and make some great choices on a new construction home. If you're scared, worried about new construction, especially pre-sale where you have to make all the decisions yourself, you shouldn't be. You just need the right people sitting next to you that can enable you to make the great decisions that you already have in your head. It's not like we're going to make these decisions for you, but we're just going to sit alongside you and calm everything down and walk you through the process. So the bottom line is I think the market's going to be stronger than it was in 2025. I don't think it's going to be ripping. I don't think it's going to suck. I think it's going to be just kind of steady right down in the middle. If you're thinking about buying or selling, I would say that that needs to be much more driven by your life than it really needs to be driven by the market. Because if you're waiting to time the market, it's really hard to do. But real estate is really also about people's lives. And so you need to make it a life decision. And it's not a bad time to sell if it's a good time for your stage in life to sell. And it's not a bad time to buy if it makes sense in your life to buy. Stop trying to time the market and get on with it, because I've learned a lot of lessons over the last year about the things that really matter in life, and their people, and the real commodity that you have in your life is time. And if you're looking to make a change in the real estate market, it's hopefully so that you can have better time with the people that matter. And a couple of $1,000s here or there in a different direction shouldn't really be driving the issue. So anyway, follow us, reach out to us. We'd love to hear from you. I'm Scott Daly from Daily Real Estate. Have a great day.